today many of the Indian companies are very large. And therefore, while consortium is a good idea, but for each bank to contribute meaningfully, it's important that the size goes up.
And let us understand the Indian economy today is a demand-driven economy.
By 2035, with these scales of operations and the GDP growing in that manner, definitely India needs large banks.
We can have a structure wherein at the top there are a couple of very large banks. And these large banks are not only large in India, but also outside India.
Why do India need bigger banks? And whether consolidation is the way ahead. So may I ask Mr. Tiwari to start the discussion?
Thank you, Monojit, for having me. And I was hoping that you'll start from that side. It'll give me time to think. But anyway, thank you. So I did not think that business standard will have such an appetite for public sector. I mean, this is the third session now. So, but nevertheless, to come back to your question, first thing is, do we need larger banks? So while you answered yes, but I think it's important to lay out 2-3 reasons. Everybody talks about them, but what are the nature of these reasons? First is scale. Now, larger banks, as you mentioned, only 2 in the top 100 so far. Larger banks means more capital, and therefore by RBI's definition of capital, which is tier 1 capital, where the borrower is 20% and 25% is the ceiling, that goes up as the bank size increases, and therefore one can write larger checks. Today, many of the Indian companies are very large, and therefore, while consortium is a good idea, but for each bank to contribute meaningfully, it's important that the size goes up, and we have seen this as banks have grown larger. They've been able to underwrite larger checks and take that risk. Secondly, technology spend. Now, technology spend is something every bank has to do. It is not only the customer convenience and the front-end look and feel, but also the cybersecurity and data analytics and AI now coming up. With all that spend needed, if the bank is large enough, it can spend regularly on technology. Smaller banks will find it hard, and we've seen this in the ease reforms, where every bank is getting supported, but the smaller ones still struggle with upgrading the technology and spending that kind of money. So that's the second thing, and it's a technology spend is not a choice, it's a necessity. And third is, of course, that as banks expand, and we've seen this globally, that the cost to income and also the cost to assets ratios improve as the banks become larger. In India, this is still between 1.5 to 2%. Globally, this has come down to 1% or lower. So size makes it more efficient. Costs get spread over a lot of areas. And third, of course, is the kind of talent the banks need today. It's not only the regular banking cadre, it is specialists in risks, specialists in IT, technology, AI, all of that. You need to spend money. You need to have large enough footprint to be able to get all these together. So there's a very clear case for large banks. There's no question on that. Secretary also said today morning that the first wave of consolidation, State Bank, of course, started earlier, but in 2017 we completed. But others, all parameters which were envisaged have been met, except for one which he did not mention. So there is this, whatever happened in terms of consolidation has gone well. All the banks have improved performance, capitalization, their ratios, the efficiency, profitability, all parameters are done well. So case exists. Now, of course, PSB consolidation is a government role, and we will leave it to the government to decide if and when they want to do this. But case for large banks is a clear yes, and we should have it. Of course, there should be other classes of banks like niche banks, which were mentioned, and other small banks, which can be community-oriented, maybe industry or sector-oriented, which can fulfill those needs. But as far as India goes, India definitely needs at least 2 banks in top 20. That should be the aspiration.
At least 2 banks in top 20. That's a very ambitious thing, but of course we hope that we will. In fact, top 4 banks are from China in that list. China has 7 banks in top 20. I'm not saying that we should become China, but
I said at least.
at least 2. Yeah, that's an important point. Mr. Pandey, your opening thoughts.
Yeah, I believe when we talk about, the need of the bigger banks, I see the 2 perspectives. The first one, let us see the economy and the aspiration, like, the wish grow. When we talk about 2030 and 2047, And let us understand the Indian economy today is a demand-driven economy. If we take the average age, the consumption in our own country, and that is the reason the government of India is pushing the Atmanirbhar Bharat. So that is the first part. The second one is coming maybe because of the various geopolitical issues. We are seeing possible de-dollarization. Now, in that case, for managing internally as well as externally, say in the prime bank list where the Indian banks are. So probably I feel taking a clue from the both the sides. We certainly needs the bigger banks wherein the other part of the world they believe on our capital adequacy, our resilience, our strength. And like they're opening the Nostro account, Vostro account like we are opening up till now or maybe few years back. So I think that will be driving. The another one is the combination of, I would say, the balance sheet. Now, underwriting is a very big issue. Some 15 years back, I think my panel will agree with me, we were saying the projects worth around say 800 to 1500 crores. But now we are seeing the project of say 8,000, 9,000, 15,000 crores. Now to
Right.
underwrite, we should have a balance sheet of that size.
Right.
Because with 200, 400 crore, you cannot underwrite the 10,000 crores.
Right.
So the projects which are coming in, the underwriting which is happening, where maybe in the semiconductor or maybe in the renewable energy. So I think these two are the driving force, which is going to drive further the need of the bigger banks in our Indian country. That is my observation.
So you're saying that newer sector has emerged which has huge funding need. As a result, bigger banks will be required.
Very true. See, it is straight away the underwriting capabilities and the amount of underwriting, that is the risk resilience. It depends upon the balance sheet size of the bank.
Correct.
And certainly when you are a bigger in the balance sheet, you have a bigger and better capability to underwrite the better projects. So I think that is the one part. And second is when de-dollarization is happening. So you need to be in the world frame rather. So because where the transaction is going to take place if there is a de-dollarization.
Right.
So certainly the going forward next, I think 3 to 5 years, 7 years, you will be seeing that various sort of the trade exchange is going to happen on various currencies, maybe on the metal items as well.
Right.
So we do not know how it will shape up, but then the thing is that the bigger banks need will certainly arise going forward as the country is progressing.
Right. Thank you. Thank you. Mr. Karnatak, your thoughts. I must add here that in the last round of consolidation, some of the banks were left out. They were not considered. Bank of India is one of them. UCO, Central Bank of India, Bank of Maharashtra are some of the other banks. So yes, sir. Your opening thoughts.
Yeah, so thank you for having me here. There is a definite thought process for the large banks, no doubt about that. There should be large banks. So I am saying that in the macro context, see, if you see the growth in the Indian economy, how it is happening. So it took India with the first trillion US dollars for 65 years. It took
Right.
us to reach that level. From 1 trillion to 2 trillion, it took another 7 years for us. And from 2 trillion to 3 trillion, India became in another 2 years only. And the way the Viksit Bharat is there, that we need to reach that $40 trillion mark by 2047 and reach another $30 million mark by 2035. With these scales of operations and the GDP growing in that manner, definitely India needs large banks. No doubt about that. So, in my sense, at least 2 to 3 large banks should be there from India side, both in private sector and public sector. Not only in terms of the total business, like in deposits and advances, but also in terms of the asset size, number two, and also in terms of the market capitalization. So all three things together, only then we can say that in 2047 we have become a Viksit Bharat. So it has to be there at least 2 to 3 banks, maybe 4 banks, both in private and public sector side over there. Apart from that, something which is very important again is that India is a very diverse country. You have to like take care of 140 crore of population, and then we have a different demography also, like we have rural branches, semi-urban branches, urban and metro branches. So as Secretary Sir had rightly pointed out, there is always a scope for large number of banks, not only large size banks, but mid-size banks also and small banks, both in private sector and public sector. But that theme would continue considering the size and scales of the country which is there. But over and all, there is no doubt about that. There should be at least maybe 3 to 4 large banks which should be in the top 100 in all the three parameters, whether it is in the total business, market cap, and also in the asset size.
Asset cut. I think we are kind of indicating towards the Narsimham Committee recommendation where we have a 4-tier structure banking system. Yes, Mr. Chand, your opening remarks.
So thanks, Mr. Shah. I do agree what my fellow colleagues said, that one is a policy call with regard to the merger and consolidation. I think that's a stakeholder call, and the secretary himself was here to address that issue. But purely on a debate of whether India needs bigger bank, the answer is clearly yes. The reason being, small is beautiful in the banking sector, but the big and bigger are more beautiful in the context of three, I would say, in the context of three. One is that suppose a large bank, the capacity to underwrite is significantly higher. At the same time, the ability to put money or invest into technology would be much higher. And thirdly, the way you can optimize your branch networking and the resources, that would be much better. So in that way, absolutely, we need bigger banks, big banks. And as India migrate to a mature market, I think taking the global example, we can have a structure wherein at the top there are a couple of very large banks. And these large banks are not only large in India, but also outside India. That means the global ranking that we are talking about. And that at the middle level, there would be niche banking. At the below that level, there are a large number of small banks being there. So I think that's a proper way to debate at this point of time, because as we migrate to a mature market, I think we need to debate and discuss on this. I'll just add two more perspective to a bigger bank in the context of the discussion today. Look, many of the banks who are big now, the global top 20, they are not only standalone within their country, they are big, but they do have a huge, significant, dominance outside their own country also. Any large bank for the matter. India for that context, in case we want to be big global top 20, we are at 133. We used to be in the top 100. So in case we wish to migrate to a current large banks, across globe, then we need to add also significant international business to the domestic bank. So we need to be big within India. At the same time, I think we need to be significant operation outside India, and we as a bank, being India's international bank, can play a big role therein. SBI is already therein. So I think India need to add also a lot of masses outside India to be on the side of the big bank that we are debating as on today. The other aspect also very important, that if you look at the large banks of top 20, top 50, apart from their co-banking, they are on the para services, they are very, very strong. Whether it is a private banking, capital market banking, wealth management, there are a lot of other businesses, they have been very, very strong. I think when we talk about big in terms of scale, we need to talk about all these aspects which really make you a global universal bank and you are in the top 20 or top 50. So I think we are discussing the subject at the right time, because we are getting into a mature market scenario. And as I said, at the top we need large banks, big banks to really take advantage of the scale and make the Viksit Bharat kind of a growth requirement a possibility going forward.
Right. I will come back to that point that you said that we need banks also need to generate sufficient fee-based income, advisory income. That's also very important. I will come that at a later stage. But Mr. Chand, if you can share your thoughts on the previous round of consultant exercise, what was the experience? What were the key challenges that you had faced during that time?
Bank of Baroda fortunate to have the first merger and consolidation within the banking. It happened in 2019 itself with two banks getting into the bank umbrella. So I think, the experiment has been very, very successful in terms of the numbers that you look in today. I think to a large extent, it is because of the merger that happened at that point of time. In terms of challenges, when any merger process, then you have to plan your technology integration very carefully. Look, now the banking is almost like a technology. Everything is, not a single banking services is given without technology. So first thing is to plan out how the technology integration can be done, and that I think the bank did well in terms of because all the three banks were in the same platform. So I think that's something critical. But at that time, maybe the number of applications that each bank was having less. But now because the multiple application across the bank, I think you need to plan out that more importantly, and that's a key challenge for any merger consolidation that we think about. The second aspect which is very critical is with regard to how do you integrate your HR workforce. And HR is always a very soft theme within banking. It's something, it's something we need to manage in a manner which again gives create a new workforce which is much more agile in terms of looking for future. So there are two piece of aspect in the merger. One is on the technology side and the second in the HR side, which is normally a challenge, and the bank did well in terms of managing it well. And subsequently, all the mergers that happened, Bank of Baroda was a case study. I mean, at that time, my people tell me that other banks, they reach out to Bank of Baroda to understand how things happened in 2019. So I think these are the, in case you handle these two key
Yeah.
pieces, I mean, you are through. I mean, that way the process can be much easier.
Right, right. HR and technology, these are the two key challenges during the last year merger process which banks should be aware of. Mr. Pandey also oversaw the merger of Union Bank with Andhra and Corporation Bank. Sir, your experience and how is the technology integration? Are you guys all in the same tech platform, the other three banks?
It was on the three platforms, but let me be very clear that you may say that it is a finacle for all the three, but you know the customization that has happened in the bank, you can never say that all the three are okay. So it is actually virtually where you are in the business of the amalgamation. It is totally a different version. Okay, let me put differently when you asked, because the point when the last round of amalgamation has happened, it was a COVID period. So let us understand it was the toughest period when you are undertaking this amalgamation process. I would say that the challenges I would not say, but the point to ponder upon is 3P, that is people, product, processes, then T for technology, D for data. These are the core. About top of it is the customers, and the last is the topmost is the culture. So I think because customers, you know, they get dissatisfied if you are not making it properly. And the last is the culture, because if this culture is not integrated or harmonized, probably the success depends upon the entire culture. Now I think these are the challenges, but then there is a good amount of experience and expertise in the Indian public sector space, which have earned a lot of, you know, during the past few amalgamations. So I believe the conducive factor which is happened as on today, let us understand is what secretaries have told, that the niche customer will require niche banks. And the most importantly, the recent development of one state, one RRB. Okay. Now RRBs are strengthened in technology, RRBs are well strengthened in mobile banking, whatnot, with the products. Now they are also planning that some of the RRBs are even like, you know, smaller banks. And they are even planning, some of them are planning for listing into the exchanges. So I think that will play a very good role as far as the rural market is concerned. But at the same time, you know, the challenges are there, but at the same time, opportunities also there, while, you know, the process of amalgamation is thought of.
You talked about culture. Culture, I mean, the general perception is that all public sector banks have same culture. You are saying, no, that is not the case. Cultural amalgamation is also key. So, Mr. Tiwari, I mean, was it much more easier for SBI to amalgamate? Because culturally, it's much more synchronized. What was your experience, sir, from the merging associate banks?
So it's never easy. Let me start with that. Though we had the same technology platform, but as Ashish pointed out, the same tech or core banking can have different versions. So for example, Finacle can have 10, 12, 8, whatever version, and if there are different versions with different customizations, that needs alignment. In our case, so broadly, as I said, technology was similar, the internet banking was similar. We also used to second people from the bank to be the MD and CEOs of those banks. So in that sense, there was some bit of a commonality, but yet we found it difficult for two, three reasons. One is that these banks were very regional. So for example, Travancore was very Kerala-focused bank. And similarly, Bank of Bikaner in Jaipur were very Rajasthan-focused bank. And they were very integrated into the local state, its culture and all. Whereas State Bank is a pan-India bank. So while we are present everywhere, but we have an outlook which is very cosmopolitan in that sense. So once we merged these banks, there were two challenges which we faced. One was the culture, as you are asking. The lot of state governments were very resistant to this, and they said, this is our bank, and how would you change the name and merge it and all? And there had to be some rationalization of branches if they were next to each other and all. So we had to be very sensitive to this requirement. And even to those people who were working in those banks, we had to do a lot of town halls, give them that comfort. What helped also is the fact that State Bank's salary structure was higher compared to others. So we gave them an option, you can continue this way, and who will continue at a lower salary. They all chose to come to the State Bank salary structure. So that helped, but it took us time. Secondly, the underwriting standards, though you can say that it is the same group, but State Bank underwriting standards were far stricter. And once we took them in, this was 2017, it was the beginning of the NPA cycle. And we found that they had a lot many more NPLs which were not clear at that point of time. So we had to clean up quite a bit. So it was a struggle for us, and our NPLs also went up as a result. But overall, we were able to do it faster because, as I said, tech platform was similar. We were in control of things. We had to take care of that culture aspect, especially the state government and the state people sensitivity which was there. But we managed that by being very transparent, listening a lot, going out and talking to people, and all of that ultimately helped, giving them responsibilities. Even in promotions, we helped them that, okay, you will be absorbed in the respective grades and be given equal promotions. So the target or the acquired company always has, people have all these apprehensions that will we get promotions on time, will we be considered equivalent or not, all of that things. So we addressed all of that, and that helped.
Right, right. Mr. Karnatak, Mr. Tiwari is raising a very critical point of the previous merger experience, that asset quality was not good that time when these mergers happened, because AQR was going on that time. Right now, asset quality situation is much better, much under control, as we have heard in the previous discussions also. Do you think, as a result, this could be the right time for the next wave of consolidation? I also wanted to add, since Bank of India was not part of the consolidation process, do you think that because of that, Bank of India has lost out some market share? Slightly, you were in a disadvantageous position. What's your view on this?
So as far as the asset quality in the system is concerned, you are well aware that the asset quality has its bets in India, both for the private sector banks and public sector banks and scheduled commercial banks in general. So asset quality is very good. So that is not a challenge as far as the consolidation or merger and consolidation is concerned. As rightly said, that earlier there were certain issues of AQR, and then in 2020 when the bigger consolidation happened, the COVID also came. So the effective date was 1st April 2020, and COVID had just hit, so there was a lot of uncertainty and things, a lot of collection issues were there. So I remember clearly at that point of time, I was also part of the consolidation exercise in PNB where Oriental Bank of Commerce and United Bank got consolidated. A lot of issues with collections were there, and it was a top of the thing at that time. With the COVID also coming and consolidation also coming. So this is the right time for consolidation as far as only one part is concerned, which is the asset quality. So that challenge should not be there because most of the balance sheets are clean. But as far as the other broader point, just to the brevity of sake, I would say the PPT part is always a challenge in the sense that the PPT means the people, process and the technology. So integration of the people within the consolidation exercise, as Ashwini ji from SBI has rightly said, that there has to be transparency and fairness as far as the consolidation on the HR side is concerned, so that everyone in the organization, in the consolidated organization, feels that everything will be transparent and fair. That is one point. And also the assimilation of the cultures, because all three banks may be having, for example, 3 are consolidated different cultures. Second is the process, because all three banks are having different processes as far as the policies are concerned and the other guidelines are concerned. There also need a consolidation is required, because you can't have three policies as earlier because three banks were there, to give an example. So that is another big exercise that the banks have to go through on the policy side. And then obviously the technology side, as rightly said that. But now I think that technology is not that a bigger challenge. Earlier the consolidations were happening based on the technology, if the platform is same or not. To give you an example, during this RRB consolidation, like for we got the RRB in Madhya Pradesh, our platform was different and SBI platform was different. So we have been able to migrate within the timelines given. By 15th of September, this consolidation has happened. So the vendors which are there into the technology, they have been able to build up the stack in a way that different technology platforms can also be amalgamated. So that challenge is also now over to a certain extent. So in
Right.
that manner, I think we are at the right time to have some commercial calls on consolidations.
Right, right. I must also remind the audience that Bank of India and Union Bank, their merger talks were there for the last 20 years. I think it started sometime in 2004. I mean, I think around 2009-10, there was some kind of alignment between Union Bank and Bank of India, sharing the loan syndication and things like that. I think when Mr. M.B. Nair was there and Mr. Balachandran was there was some synergy between those, on the lines of OIC, Oriental Bank, Indian Bank, and one more bank. So yeah, but Mr. Chand, coming to you, according to you, what should be the key parameters to identify candidates for a merger? Is it the branch, or what could be one or two say two key parameters for this consideration, selection of banks?
I think at this stage, identifying candidates would be slightly far-fetched, because a policy call we're debating with regard to way forward. So slightly difficult to tell in upfront with regard to the, but the biggest points would be the compatibility. Is it adding scale? Is it creating the real synergy? But then parameters would be slightly, for me, far-fetched. But again, I am very clear that when you talk about a bigger subject like this, that are you creating scale within India and also creating scale outside India so as to be a global bank? There are 2-3 concepts that working for a merger and consolidation. One is that we need to add scale. Secondly, we need to be a global bank. Thirdly, it helps us in terms of creating our own goalpost of Viksit Bharat. I think in that context, there are multiple possibilities that can happen. And again, I leave it to the policy makers to make the right call. But at this point of time, the only aspect, because all the banks are good, all the parameters for almost all the banks are good. So there should not be any, set of parameters matching. It should be compatibility can be one key reason for that. But I leave it to the policy maker for that. I'll not be slightly guessing on those matters.
Right. Mr. Tiwari, is branch rationalization inevitable for a merger?
So branch rationalization is not the objective of a merger generally.
Right.
That is, and in any case, even for a normal bank also, it depends on whether we need 2 branches at the same place. That is one category. And then of course within the city also. See, you've not seen too many branch closures. After mergers happened, if the branches were next to each other, some calls might have been taken. But other than that, in the regular course, you don't see branches being closed by any bank as of now. The pace of increase or opening of branches might have come down a little bit because there's so much has shifted to digital. But as a country, India would always need a mix of approaches. So phygital, which is being talked about, I think we will always need branch as an anchor for customer to come in, and there will be a segment of customers, like Secretary mentioned, senior citizens, maybe students and all, who might need to come to branches still. And going forward, maybe advisory services can be offered at scale from branches and so on. The branches will always be needed. How many will be needed as an outlet? Maybe that number might not be as large as earlier times. So rationalization is not an objective of a merger. Objective of mergers is complementarity, the scale which is developed. I mean, to add to Mr. Chand's point, I think internationally, I mean, we and Bank of Baroda are 2 of the larger international banks, along with Bank of India as well. What we found is that while we bank Indian companies, which should be our core bread and butter, going outside in terms of credit, But once it comes to transaction banking, we lack that technology because cash management internationally, with its international sweeps, which is notional, is a high-end, expensive technology. And for doing it for just a handful of corporate doesn't make sense. But if we become large enough, then we will invest in this. And we are considering investing in this. So my point is that as an Indian bank, because Indian corporates are increasingly going global, we need to be able to support them. And this is our role, and therefore international is definitely one thing. Another thing which I'll add, which has not been said so far in the discussion, is this entire capital requirement for the transition to a green economy. The numbers are staggering. I mean, they range from $10 trillion till 2070 to now, latest number is $23 trillion. Now, unless the banks are large enough, I don't think they are in a position to support this. And today in India, still the green transition is largely supported by banks. It's not, there is some private money, but largely it's still banks. So we will need banks to be scaled up and be able to support that kind of transition. So that's my way.
Right, right. I will slightly digress now to come back to Mr. Chand's point of a big bank should also sufficient have non-core income, fee-based income. It is in this context we see the RBI's 22 directions which came out in the policy, and one of them is allowing banks to finance M&A. Do you think there is a scope to develop capabilities within public sector banks for M&A advisory, like the way the foreign banks or private banks does? For example, Bob Capital Markets. Do you think there is a scope for M&A advisory also?
Yeah, absolutely. Actually, the point that I talked about that, I mean, as an Indian bank, we are too focused on the core banking as on today. Means we are there every space, but then the scale is very limited as on today. So the moment you think of a global bank adding scale, I think all these M&A advisory, wealth management, private banking, transaction banking, everything has a huge potential to add significant income to the book. And this is what the global banks are doing, and I think we need to work more to make us really increase scale beyond the core banking so as to add a strong income flow to the bank. I mean, that's very significant for the purpose of our aspiration to be a global bank.
Right. The RBI guidelines, draft guidelines also said that it allows overseas M&As by Indian corporates. Indian banks can fund that. Do you see that as a big opportunity given that at least you have a huge international presence? How big that is an opportunity?
Yeah, that's a very good opportunity actually. See, if you see when we are operating in overseas centers, there are many Indian large corporates like top-notch 20, 30 listed corporates who are going for merger and acquisitions abroad also, overseas also, offshores. At present, we were not funding them because of the RBI guideline, because the local guideline and the RBI guideline prevails for the banks like India, like who are operating abroad. Now with this go ahead by the RBI, definitely see if an Indian top-notch corporate is acquiring a company, say in USA, definitely we can fund that transaction, not only in India, but also from our New York or from San Francisco branch. So that's a huge opportunity available for all of us. I was just going through the data. RBI allows up to 10% of the tier 1 capital, right, for this. So among the 12 public sector banks, the tier 1 capital is around 12 lakh crores as on 30th June audited numbers. So 10% of that comes to around 1,20,000 crores, 1.2 trillion rupees. So that's a big number to fund. So definitely there is a lot of scope and opportunities available for the banks in India now for these kind of activities.
Mr. Pandey, is there any particular clarification from RBI you are looking at on this M&A financing draft norm which came out last week?
Actually, nothing is specific on that, but I will continue to your questions, on the merger and acquisition. I think banks, even public sector banks, do have a good skill set on the M&A, advisory or a funding. I would put it differently. When the public sector banks have become today technology company, when we have learned technology, so I think we are well placed to then, even in the credit underwriting, we were talking about the semiconductors underwriting or maybe the data center underwriting. So we have done all that. So I think M&A is not an issue, number one. Number two is the foreign currency position of a bank. So whether through the branches outside India, or maybe in the gift city, or maybe the NRI consultation business the banks are having. And with the coupled with the, I think, M&A advisory skill set, probably. I think that is not an issue of, going ahead and making a good business in this case.